simple steps to becoming a profitable trader. But guys, before we actually start, I want something in return. I want your full attention during the webinar, and that will include two things. First, I want you to bring a pen and paper right now because you will need them later. And second, I want you to cut down all of the distractions except your email, because you will need your email too in a second, and I will tell you about that. Right here in the webinar, you will see a chat box at the bottom of the page, and right here you can ask us any question that you want, and also we want your feedback in this chat box during the webinar. Now here's the thing, there are a lot of you right now in this webinar. I can see that in the screen, and my team might not be able to answer all of your questions during the webinar, but we promise you that we are going to answer your question. If not during the webinar, then we are going to send you an email with the answer after the webinar, and we are going to use the email that you registered with, so keep that in mind. Now here's what to expect today. I am going to share with you my exact strategies, the ones that I use right now with my own personal money and with the fund that I currently manage right now. I'm going to give you everything you need for free at no cost. I'm also going to share with you the 5 easy, simple steps to becoming a profitable trader. Now, again, I do believe that these are the only 5 steps that you need to become a profitable trader, and I also believe that you cannot actually become a profitable trader without going through these 5 steps. We are also going to share an eye-opening examples and real case studies with real people and real numbers. And I'm also going to share with you what I call the freedom income blueprint. Guys, being financially free contains 2 words, and most people forget about the second word, which is freedom. Making a lot of money, but at the same time not having a lot of free time, doesn't worth it. Guys, you want both. You want freedom in time, and you want to also be financially independent. We are going to share with you exactly what it takes to achieve that. And finally, we are going to show you how you can start today and take action. Now here's my big mission for Pro Trading University. I want to create 1,000 profitable traders around the world, and here's how we are going to do it. Guys, you are going to start here in Pro Trading University, and what we are going to do is we are going to teach you and advocate you. After that, profitable traders will be created, and here's how we are going to do it. We are not only going to teach you and train you. I don't believe that is enough. We are actually going to personally mentor you, and we are going to make sure that you are profitable with real money. And then after that, your track record will start to build up, and then potential investors will get interested in your track record, and they are going to invest in you, and you are going to share the profits. This webinar right here is all about empowering you. I wish I could make the webinar all about me, but the truth is, it's not about me, it's all about you. Now here's a sneak peek of what I call the circle for your financial freedom. We are going to dissect all of these 5 steps in detail just in a second. Now I want to quickly share with you a study that they literally do it every year, and in every year we get exactly the same results, and you might already heard about the results, and it goes like this. 85% of the traders are failing, which means that with time their account tends to go to 0. Now 10% of the traders are breaking even. Now this means that they are neither making nor losing money, and their account is oscillating around the break-even line. And only 5% of the traders are actually making money. Now here is my goal in this webinar. I want to put you, by the end of this webinar, on this top 5% of the traders. Now I know that this is a bold promise, and I get that, but do you know what? If you stay until the end of the webinar, you will know why I can make such a bold promise, and I will keep it. So stay until the end of the webinar. Now let me share with you a quick fact about why you want to be a Forex trader right now more than ever. Not so long ago, I think 2 years ago, the daily transaction volume in the Forex market was $4 trillion per day. Now, that is per day, $4 trillion per day. Now, to give you an idea of how big this number is, let's compare it to the stocks market. In the stocks market, the daily transaction volume can be only up to $280 billion. That's it. So this will give you an idea of how big $4 trillion a day is right now. But do you want to know what is even cooler? Right now, today, the daily transaction volume in the Forex market grew to $5.2 trillion. Now that is more than 25% growth in just 2 years. And you know what? We are expecting right now even another 20% growth in the Forex market across the next 2 years. Now here's my point of this. If you want a piece of the pie, you want a piece of a big pie. You don't want a piece of a small pie. Now for those of you who were following me for some time right now, you probably already know that I have been running a beta test program for quite a while right now. And here are the top questions that I get all the time. The number one question I get is, hey Ahmed, I have a full-time job, but I really want to be a Forex trader. So can I make my job not interfere with my Forex trading? And the answer is yes. In matter of fact, most of the students I got, they either have a full-time job or they are full-time in school. And in both of these situations, they did not find any issue in executing the trade plan accurately and perfectly. And the number two question I get all the time is, can I do this while having a full-time school? And the answer is also yes. And I can say yes to both of these because, again, most of my students, they fall into one of these two situations and they did not find any issue in executing their trade plan. Now the number three question I get all the time, hey Ahmed, I did not go to college. In matter of fact, I did not even graduate high school. I'm not sure I am intelligent enough to be a Forex trader, so am I smart enough? And here is the answer for this question. I promise you, you are smart enough, and here's why. The strategies that we are going to use, they are very, very simple. We are not going to use complicated financial models. The strategies that we are going to use in trading the Forex market, they are very simple and they literally can be mastered by anyone in this world. And then finally, the fourth question I get is, Ahmed, I don't have a lot of capital right now to trade with. So will that be an issue or not? And here's the thing. I will be completely honest with you. If you have capital to start with, then it will be easier. But if you don't have capital, it won't be hard, but it won't be as easy. And here is why. When I started trading, I was almost broke, believe it or not. And the route I had to go through then is building up my track record and then reaching out to potential investors. So if your situation is like my situation when I first started, which I didn't have a lot of capital, then here's what you are going to do. You are going to build up your track record and then you are going to reach out to potential investors. So in summary, no, you don't need capital, but it will be easier if you do. If you don't, then that's fine. You are just going to have to take another route in becoming a professional trader. Guys, I want you to meet Hamido. Hamido, he is a graduate from the beta test that I used to run. So Hamido's story, he just graduated college and then he was faced by the reality of life, which he had to get a job, and he did not like that. He told me literally, I just don't want to work for a boss. That's all I want in life. I don't want to work for a boss. So he came to Pro Trading University and he took the program. And before I mention the results of Hamido, I want you to know that Hamido, he is not your typical story. Hamido, he took what I've taught him and he actually implemented and took action. So this is not a typical story, but long story short, he became a profitable trader within 60 days of the program. And right now he is actually in the process of building up his track record, and he is expecting some potential investors very soon. Now guys, I want you to know what is possible. The number one dream of becoming financially independent for Hamido has finally became a reality. Before we move any further, I want to mention some disclaimer. Right now I don't have to mention this, but I really do want to mention this because I don't want to misguide you. And I want to make sure that you understand the reality of what we are doing right here. The first thing is, this is not a get-rich-quick scheme. What we are doing right here is we are building a lifelong business. And guys, I get this question all the time, and it is, Ahmed, how long will I take to make money? Guys, again, if you have the get-rich-quick scheme mentality, then this is not the right place for you. You either change your mentality right now, or please, I want you to turn off your computer and leave right now. This is not a get-rich-quick scheme. It will take time and it will take effort. And another thing that you should know, that we want to only work with dead serious and committed students. We will work with only students who are prepared to give it a minimum of full 90 days. So it's that you or not? Well, let's find out. Now let me tell you a quick background about me. I have been trading right now for over half a decade, but do you want to know what? I am planning to trade for at least 50 years more into the future, and here is why. Because I am planning to do this for the rest of my life. I'm not going to retire from trading at all. And I guess I have been one of the very lucky ones because I have discovered my passion very early in life. So I can say that I am doing very well in life right now, but do you want to know what? It actually didn't used to be like that at the beginning of my trading career. Actually, I have been struggling as a trader for years at the beginning of my trading career, and because of that, I've went through so much painful experiences, and to be honest, I wouldn't take any of these experiences back. It's because of these painful situations I have this level of success right now. And it actually all started at one day, and during this day, my friends, they decided to go into a road trip across the United States, and then they asked me to join them. And what I've said is, I said, I am very sorry, but I can't join you because I am too busy right now with other things. And the truth was, I wasn't actually busy at all. I've declined that because I couldn't afford it. At that time, I was almost broke. I almost had $0 in my bank account, and I was really embarrassed to admit that to my friends. And later on that day, I have felt so much pain that I couldn't take it anymore. I couldn't sleep that night. It was 2 in the morning, and the pain was just too much that I had to do something. I had to take action. So what I have done is probably like what you already did, is I've went to google.com and I've googled how to make a lot of money very fast. And then the first result I got was about binary options. Now, at that time, binary options were just starting. I think by the time I googled that, binary options started within the same month. To be honest, the offer was too good to be true. But what I've done is I went to their website and they had a phone number at the top. So I've called that phone number and it was 2 in the morning. and surprisingly they actually picked up. And I've asked them all types of questions and I made sure that they are legit, and then 20 minutes later I've made my first ever deposit into a trading broker. It was for the minimum amount, $50 only. That was the only thing I could afford to deposit at that time. And then another 20 minutes later, I've opened my first ever trade in my trading career. And luckily, I fell into the right side of the trade and I've made 70% of profit in my trading account in just 20 minutes. And then at that time I was really happy. My brain started to fire up and I came up with this scenario. It's, hey, if I will make 70% of profit in my account in every 20 minutes, then in 1 hour I will make this much, and in 1 day I will make that much, and in 1 week I will make that much, and in 1 month I will be one of the richest men in the world. And long story short, I wiped out that account, and after that I've wiped out a lot of other accounts, and I've been struggling as a trader for 2 years. And then at one point I was this close to give up trading for good. I've literally tried everything. I've read dozens of books, I've watched hundreds of hours of videos, I've read a lot of forum articles, a lot of trading articles, but nothing seemed to work. And then my family started to call me on it. My friends started to call me on it. They told me that I am wasting my life. I was chasing an illusion. And you want to know what? It was so painful. I was so embarrassed because when I thought about it, they were actually right. I wasn't making any money. Matter of fact, I was just losing money in the Forex market. And then at that day, I've decided to give it just one last shot. But this time, I decided to do something different. This time, I've decided to actually reach out to a personal mentor who is doing this for time. I was not interested in just training videos anymore. I wanted someone to talk with and follow up on me in training, and I've done that experiment and it paid off. And then for the first time in my life, I've actually started to see consistent results in my trading. And then at that time, I've decided to really reach out to the best trading mentors in the world, and I really got mentored by each and every one of them. The list is very long, but here are just some of them. Jason Stapelton, Akil Stokes. Now you might already heard about these two guys. They're really awesome. And I have also been mentored by Mark Douglas. Now Mark Douglas, he is very famous of his training in the psychology of trading, which is really important. Also, I've been mentored by Greck Secker. Now, Greck Secker, he is famous for both owning a prop firm and an educational company too. And I've also been mentored by Erik Keremeno. Now, Erik Keremeno, he is focusing on the automation and the algorithmic trading. Now, I am no expert in that field, and that is why I am working with him right now. And actually, one of my first mentors ever years ago was Barry Burns. Now, Barry Burns, he is the one who actually convinced me to log in my trades in a journal. And right now I am personally working with Nik Pavlich, known as the FX Wizard. And do you want to know what? I am still on the hunt of other professional traders, because again, like I said, I am planning to do this for 50 years and I really don't want to be alone in this field. Now, throughout all of these mentors, I have discovered the 5 steps formula. I call it my 5 steps formula, and this formula really changed my life. And again, I really don't believe that anyone can be consistently profitable without following these 5 steps that I am about to share with you. Now guys, I will be honest with you for a second. After about 2 years from consistently being profitable, I've actually felt that emptiness that a lot of other professional traders feel too. And I guess the reason that professional traders like hedge fund managers, Wall Street traders, and all of those, they feel that emptiness after a while because, let's be honest for a second, we are really not providing a touchable value to the world. I mean, for example, engineers, they build stuff, they build buildings, they build bridges, they invent stuff. Doctors, they help other people, they save other people's lives. But being a professional trader, you won't get that feeling of fulfillment too. I will be completely straightforward with you right now. What I am doing right now is just I am making the rich richer. That's all I'm doing. I am making people who are already rich richer. So at that time, I've decided to do a little experiment. I've started a YouTube channel and I've did a very quick and short tutorials on the strategies I use. And at that time, I've started to get literally hundreds of feedback every week. And for the first time in my life, I felt that sense of fulfillment inside of me. It's not that I wasn't happy at the time, I was happy, but the feeling I got from the feedback was just a different type of happiness. And at that time, I literally got addicted to that feeling. Now let me share with you the first ever feedback I've got. And this feedback was from a girl called Cindy. Now I do remember this feedback to this day, word by word, and I really believe that I will be remembering this feedback until I die, because if I haven't got this feedback at that time, then I probably wouldn't be standing right here right now teaching you. This feedback, it goes like this. Ahmed, thank you again for enlightening me. I have had 4 mentors in the past, and not one has even mentioned the flow as you did. Now, Cindy, I've already thanked you, but hey, if you are watching this right now, then I am thanking you again. Thank you, Cindy. Another feedback I've got, this is a very recent one, and it was from Kawami. Now, he said, things I have been trying to understand for months became meaningful to me right now. Now what we are going to do right now is we are going to take a very quick break and we are going to shift over to the whiteboard for the training. Alright traders, so right here we are on the whiteboard and we are going to dissect the 5 steps, and we are going to start with the first step, which is the rules. Now here is the thing about the rules. You do want the rules to be 100% clear and not subjective. And our definition of that is if we have 100 traders in the room, then we all are going to enter the market at the same time and place and exit the market at the same time and place. This is our definition of a 100% clear and not subjective rules. And we attack it by what we call EST. So this is how we attack the rules. And by the way, guys, I forgot to mention this at the beginning. The first step, which is the rules, it is going to be the easiest step of the 5. And you will know why in a bit. Anyway, the EST, it stands for entry, which means where are you going to enter the market? Exactly where you are going to enter the market. S, it stands for the stop loss, which means if the trade doesn't go in your favor, and we will have quite often of these situations, then when are you going to accept the loss and exit the market? And finally, T, it stands for target, which means that if the trade goes in your favor, then where exactly you are going to take profit. So right now, after we defined what you need to have in your rules, it is time right now to find a strategy that already is profitable. Now here's what I have done at the beginning, and here's actually one of the main reasons I struggled as a trader in the first 2 years is because I always heard that the trend is your friend and most of the money is being made in the trend. And therefore, I've tried to do some structured trading and trend continuation strategies. And I will tell you right now that you cannot, well, it's not 100% true in all cases, but in most of the cases, you cannot become a profitable trader for the first time just trading trend continuation strategies and structured trading. And here's why. Because these two types of trading will always have some subjectivity in them. I mean, it's not going to be a lot, but they will still have some subjectivity in them. And if you are not a profitable trader, then you can't become a profitable trader using pure trend continuation strategies. So right now you might be wondering, well, if I'm not going to do a trend continuation style, then what should I trade? Well, here's the thing. You should trade advanced Fibonacci patterns. Now, I've spent literally thousands of hours looking at different strategies and different trading styles, and this is the only thing that will work for you if you are not profitable, if you are not a profitable trader right now. Now, don't get me wrong, I do use some trend continuation strategies right now, but I am successful in trading these right now after putting thousands of hours in trading. And if you did not do that yet, again, you have to use advanced Fibonacci patterns. Now, some of the advanced Fibonacci patterns that we are going to trade are Gartleys and bats. So let's go over the rules of the Gartley pattern and the bat pattern step by step. First of all, every advanced Fibonacci pattern will have 5 points. Now, this will not make any sense for you if you are new to these patterns, but bear with me, they will make perfect sense at the end, I promise you. So we are going to start with the Gartley pattern. Now, this is where I want you to use your pen and paper right now. I am going to write down some ratios for the Gartley pattern. It won't make any sense for you if you are new to this right now, but I promise you it will make perfect sense when I am done. So the Fib ratio sequence for the Gartley pattern is going to be 1, 61.8, and then 2, 61.8. And now let me back up right here. So the first point, it's going to be 61.8 to the 78.6. Now 2, it's going to be only the 61.8, and then 3 is going to be the 127. So what we are going to go over right now is we are going to go over a live process of identifying the Gartley pattern. Let me write these down again really quickly. So the first point is 61.8 to 78.6. 2 is going to be 61.8. And 3 is going to be 127. Now here's what we are going to assume. We are going to assume that we are watching the market live and the price is declining like this. And then at some point in time, the price decides to turn around and starts to climb up again. And then after that, the price starts to decline one more time. Now this right here is going to be our first leg of the pattern. Now this is going to be point 1, and this is going to be point 2. So as we identify this leg right here, where it has a turnaround at the bottom and a turnaround at the top, what we are going to do right now is we are going to start measure our points. Now the first point is going to be 61.8. Now here's what we are going to do. We are going to measure this leg, and we are going to assume that this is going to be the start of it. So this is going to be the 0%, and this right here is going to be the end of it. So this is going to be the 100%. So the first point is that 61.8. So right now, if this is the 0% and this is the 100%, then the 61.8% is probably going to be somewhere around here. So this is going to be the 61.8 of this leg. Now, here's the first point of the Gartley pattern. The price has to touch this point right here, this level, the 61.8. So the price has to touch the 61.8, but it cannot touch the 78.6. So the 78.6 is going to be right here, so somewhere around here. Okay, so 78.6. The price cannot touch this level. So the market has to touch the 61.8. It has to enter this area right here, and somewhere inside this area, the market has to turn around and start to increase again. And after we see this, what we are going to do right now is we are going to start looking for our second point of the pattern. Now, in the second point, this is the leg that we are going to use, the second leg, and the first point is going to be the 61.8. So again, we will have to measure it. This is going to be the 100% of the leg, and this is going to be the 0% of the leg. And we have to touch the 61.8, which is going to be somewhere around here, 61.8, and the price has to touch the 61.8. Now, once we touch the 61.8, the second rule is we cannot touch the 100%. So if we touch the tip of this leg, we don't have to go beyond it. If we just touch the highest point of this leg right here, then the Gartley pattern will not be valid anymore. So we cannot touch the tip of this leg right here. We can, however, go for any height we want as long as we don't touch this level right here. So even if we turn just right here, just a pip below this level, then it will be fine. So once we start to decrease again, then we are going to look for our third point. And the third point is going to be the 127. Now this time, we are not going to use the most recent leg to do the measurement, so we are not going to use this leg. We are actually going to use this leg, which is going to be the 2 to 3 leg. So this is going to be 0.3, and this is going to be 0.4. So right now we are going to use the 2 to 3 leg, and we want a 127% of it. So if we assume this time, this leg, we are going to assume that this is the 0%, and this is the 100%. So if this is the leg, then 127% of this leg will fall somewhere around here. So if we take this length, we add 27% of this leg to the original leg. So this is going to be the 127. It's gonna be somewhere around here. And this is going to be your Gartley pattern. This is the 127. This is going to be the final point of the pattern, and it's going to be 0.5. So what we are going to do right here is we are going to wait for the market to decline and touch the 127. And once we touch the 127 level of this leg, then we are going to buy at market in expectation that the price will go up. So this is the Gartley pattern. As you see, again, it contains 5 points, point 1, 2, 3, 4, 5, and every point has to satisfy a specific measurement, and here are the measurement. So the first measurement 61.8 to 78.6, second measurement 61.8 to, let's say, to 99%, right here, to 99%, which is going to be somewhere right here, and then point 3 is going to be the 127%. And this is the pattern. You might actually be familiar of seeing them. If you are familiar with them, you might be familiar with seeing them like this. We tend to draw these two lines just to make it more visually appealing. So again, once the pattern complete at this point, we are going to buy in expectation the market will rise up. So guys, here are my exact rules of the Gartley pattern. Now, I won't bore you with the identification of the bat pattern, but I am going to write down the ratios of it very quickly. So the ratios of the bat pattern, the first point has to be 49% until the 61.8. So it cannot touch the 61.8. That's the first point. The second point is going to be the 61.8 to the 99%. And then the third point is going to be the 88.6. Now this is exactly like the Gartley pattern, except this third point right here. Guys, you do remember that in the Gartley pattern, it looked like this. And this leg, we measured it from this leg, which was the 127. Right now in the third point, or the fifth point of the bat pattern, we are going to use the original leg. And we are going to look for the 88.6 of this leg. And here is where the bat pattern will complete. And again, you are going to buy in expectation the market will rise up. So this is for the bat pattern. I will give you just 1 second to write these ratios down. So right now I am going to show you a couple of these patterns in live action. So what you are seeing right now in the screen is two Gartley patterns, and these are actually bearish patterns, which means that once they completed, we are going to sell the market instead of buying them. These are the same ratios, except that all of them are flipped upside down. So as you see, the first Gartley, it completed, we sold the market, we got our profit. The second Gartley, we got our profit too. So guys, believe it or not, but this step, which is the rules only, it's only 10 to 15% max of everything that you need to do in order to become a profitable trader. And I believe that this is also one of the biggest reasons why the failure rate in the Forex market is 90%. And that is because 90% of the traders out there, they think that all they need to know in order to be a profitable trader is just the rules when they enter the market and when they exit the market. But the reality is that these rules is only 10 to 15% maximum of everything you need to do. So let's continue. The second step is going to be training your eyes. Guys, knowing the rules of the Gartley pattern is not enough. If you know the rules and you are memorizing them by heart, but you cannot identify them as you trade live, then what's the point? You cannot execute your strategies. So you have to train your eyes too. And we have a very, very specific process of training your eyes. And all it will take is just putting in the time, and we are going to tell you exactly what you should be doing and for how long you should be doing it. So let me tell you why that this step is probably more important than you think. I am going to show you a screenshot right now of the market. Right now we have a bunch of patterns that completed right here in this chart. Now, some of these patterns are Gartley patterns. Now, you already know the rules of the Gartley pattern, and you actually already know the rules of the bat pattern too. So I want you to take a look right here and try to identify these patterns. Now, I know that you cannot measure the legs right now because you don't have your fib tools, but you still can measure them by your eyes and approximate. All right, okay, so I will give you more 2 seconds. So what I am going to do right now, I am going to show you the patterns that completed right here. We got 1, 2, 3, 4, 5. We got 6 patterns that completed right here. We got 2 Gartleys, 2 bats, and 2 ciphers. So notice how that the first Gartley pattern, it completed at the top. We saw the market, and then we got another Gartley after that, and so on and so forth. Now, I will tell you that this is not your average scenario. Typically, we don't have this much of patterns going back to back. But at this market, we have been in a consolidating phase. I think this was in Euro Yen. Euro Yen, for some time, it wasn't trending, and in non-trending markets, these patterns tend to appear. So here you go. What I am going to do right now is I am going to go to the slide before this, and I'm going to take out these patterns. Now, I want you to identify the patterns again. You already saw them. You already knew where they are. So can you identify them right now? You might be able to do that, and you might not be able to do that. Well, I will tell you that you need to reach a level of, just by looking at this chart right here, you can see all of the patterns completed and exactly at the same price level. And you should be able to identify that just by your eyes. And if you don't reach that level, then your execution of the trade plan will not be perfect. So here are the patterns again. I will take them right now. Here are they again. Now let's move on to step 3, which is the back test. Now, most of your time is going to be spent on the back test. Here is where I spent thousands of hours of work. It was in the back test phase. Now, here are the reasons that you do want to do the back test. First of all, you want to make sure that your strategy is profitable. Now, this reason is the most popular reason for the backtest, but it is really not the main reason. The main reason that you want to do the backtest is that you want to figure out what is the maximum drawdown that your strategies will go through. The strategies that we are going to trade, and actually every strategy out there in the world, they go through drawdown from time to time, where they don't work and all you get is just loss after loss after loss. Now, the main reason of the backtest is that you want to figure out what is the maximum drawdown, what is the maximum losing streak that your strategies will go through. And this is very important because you need this information to figure out what your risk per trade should be, what is your position size should be, and make sure that when you go through that drawdown, you will not wipe out your account. Now, the minimum requirement for the backtest data that you should get is going to be 100 trades per pattern per pair. So let's say, for example, that you are going to trade the Gartleys and bats and maybe butterflies too. So here is what you should aim for. Let's say that you are going to start with the euro-dollar pair. Now, the euro-dollar pair, here's what your minimum backtest data should be. You should start, for example, with the bat patterns. So you should backtest 100 bats minimum just in euro dollar, 100 bats minimum just in Eurodollar. And not only that, but they must be in the same time frame. So let's say that you are going to backtest the hourly time frame. All of these 100 trades, they must all of them be in the hourly time frame, the same time frame, and you cannot trade any other time frame that you did not backtest. And then after you finish that, then you are going to move on to the butterfly pattern. So 100 butterflies, and then the same thing with the Gartley patterns. So here's the thing about this. This right now is the minimum. So even if you get 99 trades, it's not going to be good enough. And here's why. When I first started trade these patterns, what I have done is I only backtested 1 year. I've backtested 22 pairs. So 22 pairs including oil and gold. Here's what I have done to be more specific. So I have done backtesting for only 1 year. And I've backtested 22 pairs plus oil and gold. And what I have realized, like after about half a year, what I have realized that my performance, my forward performance in trading these strategies was very, very bad. I wasn't not profitable, I was barely profitable, but everyone around me, including my mentors, for example, Akil Stokes, they were outperforming me by a lot trading these patterns. And the reason for that was two things. One of them was because I had only 1 year data of backtest, and I was trading in the hourly time frame. And only 1 year of backtest data wasn't even nearly, not even half as enough to do the optimization the right way. And because of that, I have suffered a lot. Even after I became a consistently profitable trader, I was barely profitable. And guys, so once you get the backtest data done, you are going to have a very, very amazing surprise for you, and that surprise is you are going to find out that these patterns that you spend literally a minimum of hundreds of hours, if not even more than 1,000 hours in doing the backtest, they are actually not even profitable. If you trade them, you are going to wipe out your account eventually. Your account will tend to go to zero. These patterns, the ones that we went over, and we are talking about every pattern out there: butterflies, Gartley, ciphers, bats, sharks, crabs, all of them, they are not profitable. They will not make you money. And right now you might be wondering, well, if they don't make money, then how are you a professional Forex trader? Well, I will tell you right now why and how. It is about the optimization. Now again, I want to say this one more time. These patterns, they do not make money. If your backtest data is less than 100 trades per pattern, per pair, per time frame, and you see that the data you got is actually profitable, then this means only one thing. It means that your backtest data is not accurate, and that might be because you did not train your eyes probably before you start the backtest, or it might mean that you simply wasn't focused enough during the backtest. I would say that if you backtest these patterns and you see that they are profitable and you have a minimum of 100 trades per pattern, per pair, per time frame, and they are profitable, then it means that your backtest data is not accurate and you cannot trust it. So the optimization is very crucial to becoming a profitable trader. This is why that the first step, which is the rules, it's only 10 to 15% maximum of everything you need to do in order to become a profitable trader. So the optimization, here is what we mean about the optimization. We mean that we take the backtest data, which is not profitable, and we make it profitable by doing some optimization, but the optimization cannot be too much, because if you optimize your data too much, then you are going to fall into the curve fitting, and this means that you are not going to be profitable in the forward testing. And I think that I have fell into that trap. I'm not sure if I have fell into that trap, but I will tell you what I mean. So this was actually years ago. It was when I first discovered these 5 steps, and I did not know that I discovered them at that time. I was just doing stuff naturally. And the backtest data I got was not profitable, so the optimization I've done was very complicated. And again, I think I fell into the trap of curve fitting. And here is my old way of optimization, the way that I want you to avoid. So I have had 6 steps to do the optimization. I don't think I will remember all of them right now, but I will do my best. So the first step was to delete every pattern that triggered less than 10 times in that pair. So for example, if in the euro dollar I got only 9 bad patterns in my backtest data, then what this means is I will not trade bats in euro dollar at all, because I don't have enough data. And you can see right now that one of the reasons that I was struggling at the beginning with these patterns too is because I simply did not have enough data. So first of all, I was deleting less than 10. Okay, so delete less than 10 trades in per pattern per pair. Anyway, you get the point. The second thing I have done was to delete every pattern that made less than 100 pips total. If you don't know what is a pip, then think about it like a point. So, or for example, like $1. So if you buy a stock right now at 15, then it goes up to 16, then that would be $1. So think of the pip like $1. So I've deleted every pattern that made me less than 100 pips. So if the bat in euro dollar made 99 pips only across the backtest data, then I wouldn't trade bats in euro dollar at all. So delete the less than 100 pips patterns. And then the third step was to delete every pattern that had a winning ratio less than 60%. So again, with the bats in euro dollar, let's say that they had a 59 winning percentage across the backtest data, then in this case it would be less than 60%, and then I would not trade bats in euro dollar at all. So the third step was to delete patterns less than 60%. And then the fourth step I have done is to delete the losing hours. For example, in euro dollar, let's say that the bats, they were winning for every trade that triggered at 3 in the morning. But for every trade that triggered at 8 in the morning, my time of course, it wasn't profitable. So in this case, I wouldn't trade the 8 o'clock in the morning, and I will only trade the 3 o'clock in the morning. So the fourth step was to delete losing hours And then the fifth step was, after applying all of these 4 filters, I deleted every pattern that was that made less than 100 pips again. So after getting the data, after doing these 4 steps optimization, I've looked at my data again and I've deleted every pattern. And so delete less than 100 pips. And the final step, I'm not sure about the final step, but I think it was deleting every pattern that happened less than 10 times again. So after applying all of these 5 steps, I delete every pattern that happens less than 10 times. Now, you might already can tell that this procedure of optimization is too much, too detailed, and it might fall into curve fitting. Here's the thing about this optimization though. It was profitable. I became consistently profitable just doing this optimization with the backtest data, but I was barely profitable. And honestly, for the performance I was getting, it wasn't really worth it to trade at all. I mean, you wouldn't put hours every day in trading something that will give you just very tiny amount of profit at the end of the year. And it actually took me months, I think it took me half a year to realize that my poor performance was a result of this optimization procedure and because of the lack of backtest data. And I've realized that after seeing everyone, well, not everyone, but my mentors who were trading some of these patterns, they were killing it every month. And I'm not even half as profitable as them. And I wondered why. I've reached out to some of them and I've realized that I was doing the optimization very, very wrong. So the new optimization way that I came up with, which actually made me right now more profitable than my mentors. I outperformed my mentors right now. This new way of optimization. And of course, I've done this new way after I actually got the minimum requirement of the backtest data. And this new way of optimization is just to keep it as simple as possible. It is really 2 steps only. The first step was to delete every losing pattern in every pair. For example, if the pair in euro dollar did not make any money, then we wouldn't trade bats in euro dollar. So the first step, delete losing patterns. And the second step is to delete losing hours. For example, if every trade that triggered at 1 o'clock, the sum of these trades that triggered at that time did not make money, then we wouldn't take the trades that trigger at 1 o'clock. So delete losing hours. And that's it. The portfolio that survives is going to be the portfolio that you will actually trade in real time. So survived equal portfolio. And that's it. Now, I have been trading this way for years. This is how I do the optimization. And this is how I outperformed my mentors. But I've actually also discovered an even better way of doing optimization. The problem with this better way, this new way of doing optimization, is that it requires experience. I mean, by experience, executing the trade plan every day for a minimum of a year. And if you do that, there are some aspects are going to appear to you. And there's no systematic way to figure out these aspects. other than putting in the time and executing the trade plan. So this new way of optimization is actually even better than this one right here. But the thing is that this is amazing. This alone is amazing. You don't need that new way, not for now at least. So let me show you right now what is the power of optimization. Let's look at the first month of this year, January 2016. In this month, if we were going to trade every pattern that triggers, and we are talking only about the hourly time frame. So we are going to take every fib pattern that triggers in the hourly time frame, then what we will achieve is that we are going to lose actually 2,707 pips. And this is how the equity curve will look like. On the other hand, if we were only trading our portfolio, the portfolio that we have been trading for a long time right now, then with the portfolio in the month of January 2016, we would have made 568 pips. So this, guys, is what I am talking about, that these patterns, they do actually lose money. They actually don't make money. You have to follow the 5 steps to become a consistently profitable trader, which means that you have to do the backtest and you have to do the optimization. And this is the power of these 5 steps. Now, if we assume that we are going to risk exactly the same risk in both the different ways, then if we take every pattern, then we will lose 68% of the account in just 1 month. On the other hand, if we take exactly the same risk, trading only our portfolio, then we would have made 14%. Now, this is why 90% of the traders out there are failing. It's because they think that all they need is just the rules, when to enter and when to exit the market. But in reality, the rules are only 10 to 15% maximum of everything you will need to do in order to be consistently profitable. Alright traders, congrats on making it to the last step of the 5 steps, which is the trading plan. Now guys, all of you heard about a trading plan, and you must follow your trade plan to the letter. Now here's the thing about the trading plan. It is more important than you would think. It is not just writing down your rules in a piece of paper. It is a lot more than that. So what we are going to do right now, we are going to go over some of the main elements of the trade plan. So we are going to go over the main elements of the trade plan. It's not all of them, but these are the main ones. And the first section is, of course, your rules of the strategies that we are going to use. For example, you should write down exactly when you are going to enter the market and when you are going to exit the market. It will be the exact rules that we mentioned at the beginning of the webinar. For example, the Gartley pattern, and you should write down the ratios. You should have examples, and it will be better if you put in the rules in an if then process. For example, if we get the 61.8%, then we are going to wait for the 127%. Then we are going to enter, for example. So this is the first element of the trade plan. The second element of the trade plan is going to be money management and risk management. So money management, we really didn't talk about this much, but it's really important. The money management is what are you going to risk per trade? What is your position size? When are you going to increase your position size? Are you ever going to decrease your position size if you go into a drawdown or not, and all of that. And you really cannot figure out all of this data without the backtest data. You cannot come with something that makes sense for you, because in trading, it almost every time, every logical decision that you come up with will not work going forward in trading. I don't know why, but this is the case. So money management is going to be your second section. And then a third section is going to be your trading philosophy. Now, trading philosophy, this might not seem important for you, but it is actually as important as the rules of engagement and the money management. So here in this section, it will be a very personal section. You are going to write down what you believe about trading, and you are going to write down your goals. Why are you trading at all? What do you hope to accomplish from trading? How committed are you? What are you willing to sacrifice in order to become a professional trader? And here is why this is really important. If you have a job, if you have a 9-to-5 job, then it will be very easy right there, because they will tell you exactly what to do and exactly what not to do. But if you become a professional trader, then you will become your own boss. And it means that you won't have anyone watching over your head and making sure that you are doing the required work in order to be successful. So this section will take care of that. In this section, you are going to write down exactly what you are willing to sacrifice in order to become a professional trader, and you should read this section every day so it gets programmed into your subconscious mind. And this is actually a very, very important part of trading, the trading psychology, and it's because in order to become a successful independently, without having another guy telling you what to do and what not to do, you must get a specific mindset. And this new mindset will only come by hard work and reprogramming your mind. And this is what I do with my students. And we actually spend a lot of time just in reprogramming their mindset. It is more important than you think. So these are some of the elements of the trade plan. Now, after you come up with a trade plan, we are going to show you exactly what the trade plan should look like. But after you come up with the trade plan, you write it down, you print it out, you put it in front of you all the time. When you go to sleep, it should be next to you. When you are trading live, it should be right in front of you. And then all you'll have to do after that is just follow the trade plan. And after you follow the trade plan, we are going to share with you what to expect. But guys, what I am about to share with you is our past performance. Of course, it will not be a guarantee of future performance. I don't have to say that, but I am a professional trader, and I know that I cannot predict the future. I cannot predict what will happen in the future. So what you are seeing right now in front of you is our past performance during the first quarter of year 2016. Guys, every professional trader out there, they do not keep track of their performance day by day, not even month by month. We keep our performance quarter by quarter, and a quarter is 3 months, so there are 4 quarters during the year. 3 times 4 is 12, so 4 quarters during the year, and the first quarter is going to be January, February, and March. So this is the result of these 3 months of year 2016. Now we are assuming right here is we are risking very low compared to our other account, and we are going to show you our other account too. But as you see right here, with low risk in only 1 quarter, we've gained 36%. But this number again should not mean anything to you unless you know the drawdown too. And the drawdown, the maximum drawdown we got during this quarter is 6%. Now, this is our low risk account. In our high risk account, we've gained 78%. in this account, and the maximum drawdown is 15%. Now guys, notice how this equity curve of our high risk account is exactly like our equity curve of our low risk account. Here's why. Because we are taking the same trades, but we are applying a different money management and a different risk per trade in every account. Now guys, here is where I don't want to misguide you. In these two accounts, in these two performances, we are not applying the spread. Now the spread is going to be a typical about 2 pips in every trade. Now if we are going to apply the spread, then the performance will change in 15 to 25%, to be realistic. So realistically, if you were trading with real money, then the actual gain that you will get in your broker account, in your real money, it's not going to be 36%, it's going to be anywhere from 27% to 31%. It will vary depending on the spread that you will get from your broker. The bigger your account, the better deal in spread and commission that you will get. But me personally, here's how I do it. I look at the past performance, and here's what I do. I divide the total gain by 2, and then I multiply the maximum drawdown by 2. So in this case, the total gain is 36%. I divide that by 2, and what I will get is 18%. And the maximum drawdown is 6%. So I multiply that by 2, and I will get a maximum drawdown of 12%. Now, here's how I assess the system. Am I going to be happy getting a total gain of 18% and a maximum drawdown of 12% in one quarter? And the answer is hell yeah, I am going to be very happy with that. So this is our actual performance, but even if it was half as good in the total gain and twice as bad in the maximum drawdown, I am still going to be happy. And that is how I check off a system, and this performance is totally checked off. You can apply the same thing, divide the 78 by 2, multiply the 15 by 2. We are going to get a maximum drawdown of 30% and a total gain of 39%, which again, I'm very happy with that. Now guys, with the high risk account, you don't want to manage other people's money with the high risk account. Typically, I use high risk on my personal account, and I use low risk on the fund I manage. This is one of the verified track records that we received from one of our beta test students. You might be familiar with the platform. It is verified by myfxbook.com. Alright traders, so we are here back in the screen. So I want to remind you why you are here right now. Obviously you are here right now because